investors should point out they're all higher now after yesterday's big slam dunk. In general, US futures are up between 0.25% to about 0.4% thereabouts. We have Dinshaw Irani joining in from Helios Mutual Fund. Dinshaw, always a pleasure. Good to have you on the show. What a roller coaster, right? And it's really testing times for investors. Investors have kept the faith so far. But let me ask you about financials. Now, we know that as a house, you folks have really liked the financial space quite a bit. Today, the headlines are being dominated all by one entity and one issue of maybe delayed disclosure or not adequate disclosure, etc. So how do you sort of look at the entire universe here against the present market backdrop?
So very good afternoon, Zurbi, and a very good afternoon to you and your team and your viewers.
I must say, very interesting glasses before we get started with the market conversation.
I wear them to counter the markets. They're red in color, so I'm hoping the market
absolutely
it has.
Go for it.
Okay, thank you. But anyway, so talking about financials, thankfully we were not in that particular stock that you talked about. We never used to like that stock much because of the exposure to the microfinance segment. And actually that, I don't know, the provisioning bit, where it hit them from, but the whole question now was, and then the fact was earlier, I mean, if you look at the problems that the bank has been facing, I mean, the massive write-offs that it started taking in September itself, and then December wasn't that a great quarter anyways, and before that the CFO quit, and then the extension of only a 1 year given to the MD as such. So all these things are not pointing in the right direction. And the regulator, I believe, may have been aware, and that's why he's been so strict with that bank per se. So this is what, that's why when I tell my investors that the sector that we like private sector banks, but we're very specific in that. We want to be very clear wherever the asset quality is a question mark, you should never be touching those banks. I mean, these are the times when things come out. A rising tide can raise all boats, but when the tide goes out, you know what happens, right? So that's why you have to be very careful here. Having said that, we are very bullish on the banking sector. I think now the things are even working in their favor because the new governor is, the first thing that he did was ease liquidity in the system. And that helps the sector in a big way, cut down on interest rates. I mean, we started doing that, and probably that is what they'll be doing going forward also, because the economy needs a push, and that's the only way they can push it. So I think things are laid down perfectly for this sector, and we continue to be bullish on the lenders in the private sector. The PSU, we like only one particular bank, and NBFC space, we like a couple of them, but that also is very specific.
All right, take that point. Just word on your glasses, you know, Dinshaw, what they say about rose-tinted glasses, right? When you're wearing rose-tinted glasses, even the red flags appear just like flags. So, you know, be that as it may, I want your thoughts on Zomato, largely because you've been positive on the quick commerce space. The stock has seen a big dip from the highs, and not just Zomato, because of which even Swiggy has seen a big drop. The entire profitability in quick commerce space seems to be coming under a question. What are your views on that?
So here's what it is. The fact is that, yeah, so actually Swiggy, we've been out. I mean, our latest fact sheet is out, so you can see from that. We're out of Swiggy. We didn't like the way they reacted to the competition, which is Zepto in particular. I mean, fighting discounts or discounts is not the right way to go. I think Zomato did a fantastic job in the sense that they want to fight competition by way of strengthening the backbone, which is basically bring forward the Capexes or 2-year Capexes, run them into a period of 8-9 months. And that's what you want to look for, because you want to have your dark stores in place. You want to have your logistics in place. And that's what we were looking for. But the reaction of the other player was not that great. So we moved on to that. But having said that, we are thoroughly convinced on the model. We've seen it working out perfectly in China. I mean, look at Meituan. I mean, the stock is doing phenomenally well out there. In fact, market cap of what, $70-80 billion. So we're not even close to that. As a whole industry, we're not even close to that. So I think we got a long way to go there. And frankly, I mean, we're not different from the way the dynamics of the industry works in China. It's the same. There are two-player market out there. Quick commerce, there are quite a few players there, but yeah, Meituan is a big one. But anyway, having said that, I think the potential out here for that stock to grow is really huge as such. So we continue to be fairly invested in that stock.
All right. Hi, Dinshaw. Good afternoon. Good to see you. Dinshaw, from private banks, HDFC Bank, that's been one of the largest, is the largest holding, right? HDFC
Yes.
Bank, ICICI Bank, both of them should be a few more in there, or these two are most of it?
No, Kotak also is there with us, so, and the private
All
sector.
right. All right. So private sector banks is something that you like. All right. Let's focus on a couple of other themes then. Crude oil prices have cooled off. Are there a couple of themes that you like? I recall in the past, I think you had some mild, small exposure to OMCs. It's becoming very difficult to trade that counter though, or invest in that, because there are too many moving parts. That's positive for the macro perspective, and the stock markets like it. But anything you're playing on that front, because crude oil prices moving from $80 to $70 per barrel is music to the ears of bulls.
Yep, that's true, Nigel. In fact, we have a small exposure, if you will, and that was the whole reason for that exposure. The way the crude oil prices fell off, we wanted to make way for one of the particular names in the OMC space. It's there on the on our fact sheet, so you can very well refer to that. So yeah, that and the fact that the way US is going, I think it's more of a call on whether global demand for crude will be shooting up or no. I don't think that's going to happen. In fact, if you look at the refining margins, the Singapore refining margins, they've held up pretty well. So I think that's one area that one should be looking at. But however, having said that, to make way for such an investment, we had to, we churned our portfolio a bit. And one of the things that we turned negative on was IT per se. And I think somewhere in Feb itself, we started moving out of IT. We did raise a lot of cash during Feb. And fortunately, it worked in our favor because you saw that the market tanked off in the last particular week of Feb. So we refrained from investing that cash. But in March, we've been fairly on the ball. I think we've run out half of the cash that we raised. And we've invested most of it in these new names that I keep talking about. And increasing our exposure in banks too. So.
All right, increasing exposure to banks. You'll have lightened your positions on the tech space, and you'll raise some cash in February, which you'll have deployed close to around half of that. Got it.
Nigel, not lightened. We became zero in
zero
tech. We
IT.
Got one name.
Tech.
Yeah.
Okay. One name. All right. What about the stock marketplace? Y'all, I think you'll have lightened some positioning. I think on Motilal, I think you'll had something or there. MCX is something that you'll held on to, I think. Anything else you'll have? Because these stocks have come off drastically and the market's going to go into a bit of a tizzy. Then, there's been a lot of selling out there. So tell us your view.
So we were lucky. I mean, we moved out of a few names and we lightened ourselves on a few. We're not in a rush to add those names back, frankly. I mean, Nigel, because I think the valuations is what concerned us, and that's why we moved out of those names. And we're sitting pretty. We're not adding to any of the names that you mentioned per se. But yeah, we're waiting for opportunities because we're very convinced on the long-term story in this particular segment. The capital market plays as such, as we call them the gatekeepers to wealth, if you will. And I think that's where India is going, right? I mean, the economy is going to grow, per capita is going to grow, and this is a sector where they're going to come to. So that's what we're waiting and watching. We're not increase anything out there. Such.
If I were to tell you to pick a side, I think you'll be tilting more towards bullish than bearish as of now, post the pullback. Is that correct?
Yes, that is true. And it's not pure gut feel, Nigel. In fact, we saw, I mean, if you look at the history of Nifty, 30 odd years of Nifty, there have been only 9 instances when Nifty has fallen more than 20%. And all these instances, there's been a reason. There's either a global crisis or a domestic crisis or a scam which has come up. I don't see that working out this time around. I mean, if anything, things are pretty decent right now. I mean, so if you call the President Donald Trump as a crisis for the world, then that's a different story, but I don't think so. I think he's a very smart businessman and things will work out the way he wants them to. So things will even out here. So those corrections are not in the pipeline. The average you saw this time around, I mean, the fall you saw this time around 15, 16%, which is close to the medium of 10 and 20% kind of corrections. I think we're done and dusted.
Is there anything new that has caught your fancy?
Not really. I mean, oil and gas was one, which I talked about. Otherwise, we don't believe in bottom fishing. We don't believe in getting new ideas just because they've corrected a lot. yeah, the domestic Capex plays are something that we're looking at. We've been nibbling at that sector per se, and I think some of the companies you'll see whenever the March fact sheet comes out, you'll see some new names in that per se. But that's purely because of the growth that they offer.
Got it.
And the comfort on valuations.
We'll keep an eye out on the fact sheet when it comes out. Dinshaw, always good hearing your thoughts. Thanks a lot for joining in, and good to hear that you're sounding more optimistic on the markets post raising some cash. Thanks a lot for joining in. Well, for the time being, we'll slip in a short break. And as always, Nimesh is waiting for us on the other side. He'll tell us what he's